you have a pretty positive outlook on China as an investment. Tell us why.
So China was the best performing equity market in the world. Why? Because you had the strongest earnings revision story in the world. I think that essentially continues this year, maybe not as dramatically, but I think GDP is going to continue to surprise consensus, which is always looking for this sort of gradual fade. I think it stays very resilient, and earnings revisions keep remaining pretty positive on the back of that.
What other possible headwinds to that forecast, and to what extent is it tariffs in Washington?
I mean, China's actually a pretty closed economy, and corporates are even more closed than that. Less than 10% of Chinese corporate revenues go outside the US, outside China, sorry. So I think it's sort of master of its own destiny. We had the Party Congress over the last few days or so. I mean, reiterating 6.5% GDP growth, 3% inflation, continuing to cut back this SOE reform, continuing to focus on deleveraging. I mean, leverage in China, which people have been worried about, has sort of stabilized, has actually begun to come down. So I think they're in control of their own destiny. I think, they've laid out a pretty positive plan, and I think, if those growth numbers stay anything close to what they're saying, I think consensus is going to continue to be moderately surprised. And
you kind of echo exactly what the Bank of International Settlements talked about. Kathleen, if you come inside the Bloomberg, you can see this is credit to GDP ratio, right, at 16%. We're off the highs. The idea is if you get a G forever, you're going to have some stability in the market. But that's still a slower growth scenario. Do you feel like the markets have re-rated enough for that, Kathleen?
I think they're beginning to take that into account. You really have a global economy that's growing all around the world. And if China takes this opportunity to slow down a bit in order to ensure stability, it's probably the prudent thing to do. A little bit of a slower China, where they're really focused on making sure that they don't have any sort of a financial crisis, and social stability, which is really their focus, can be maintained. India is really moving forward on reforms. Europe is doing extremely well. So a lot of the larger economies are really holding up well. So I think this is a good time for Xi to consolidate his power and really let some of the steam out, but not in a big way, out of China.